Hello and welcome to this week's Crypto Roundup. From numerous BlackRock ETF developments to rumors of a US IPO that could change the industry, this first full week of November had us on our toes. I'm Michael Del Castillo, a Knight Badgett Fellow at Columbia University, and this is your weekly crypto recap. In a 1-2 punch this week, we learned that asset management giant BlackRock has filed paperwork not only to form a new entity called the iShares Ethereum Trust, but paperwork that would result in the first Ethereum ETF if it's approved. Though BlackRock declined to comment on the filing, the move suggests the company is serious about expanding its presence in the crypto space. If the ETFs are approved, they would let investors gain exposure to the two largest cryptocurrencies by market value without having to buy and store the assets directly. This week, a contentious dispute has emerged between market maker Wintermute and the Switzerland-based nonprofit Near Foundation, set up in 2019 to support the Near protocol, which has raised $500 million and created a cryptocurrency now valued at $1.4 billion. Wintermute's CEO, Evgeny Gavoy, has publicly accused the Near Foundation and development firm Aurora Labs of reneging on an $11 million redemption deal involving the USN stablecoin. Gavoy's series of tweets outlined what appears to be a complete breakdown of trust between firm leadership, alleging that the Near Foundation had initially committed to backstopping USN and had earmarked funds for this purpose. That means, despite public and private commitments, Wintermute has so far been unable to redeem USN for USDT on a one-to-one basis. After months of waiting, Gavoy alleges the Near Foundation's offer to redeem was reduced to a mere 20% of the original sum. Gavoy's public airing of grievances was apparently intended to gain public support. Gavoy said, quote, "By not making it public, we would effectively contribute to bad practices being tolerated and repeated," end quote. The Near cryptocurrency fell off a cliff on Thursday, dropping over 10% in less than 1 hour, reaching a recent low of $1.37. Boston-based Circle, the powerhouse behind the $24 billion USDC stablecoin, is reportedly in discussions to go public next year. While the company has kept a close lid on its latest valuation, it's worth noting that in February 2022, it was valued at $9 billion during a previous failed SPAC deal. In September, Circle CEO Jeremy Allaire told Laura on an Unchained episode, quote, "We're definitely on the path to be an independent public company, and we've had the benefit of having a number of strategic investors in the company over the years," end quote. Circle's aspirations to list publicly have been part of a long-term strategy, as a spokesperson told Bloomberg, though they refrained from commenting on current speculation. Despite the setback of a failed SPAC, Circle's growth has been punctuated by substantial investments from financial giants like BlackRock and Fidelity. In spite of Circle's promising developments, the USDC market value is down 55% from its all-time high of $55 billion in June 2022. Over that same period, stablecoin competitor Tether has increased by 30%. The new leadership at FTX, the cryptocurrency exchange that filed for bankruptcy last year, is seeking to sell approximately $744 million in assets held on Grayscale and Bitwise trusts. This move is part of the exchange's efforts to repay creditors efficiently and mitigate potential price fluctuations. The assets include $691 million in Grayscale trusts, holding $597 million in BTC and $90 million in ETH, and $53 million in Bitwise 10 crypto index fund. FTX's November 3 filing with the U.S. Bankruptcy Court indicates that the sale would enable the preparation for, quote, forthcoming dollarized distributions to creditors and allow the debtors to act swiftly to sell the assets at a high price. According to the documents, FTX's legal team also hopes the proposed sale will reduce the costs and delays associated with separate motions for each sale. This step is another significant move by FTX's bankruptcy managers to address customer and investor losses following the firm's collapse. The news comes in the wake of FTX founder Sam Bankman-Fried's conviction last week on charges relating to defrauding customers and misusing client funds. Meanwhile, venture capital firm Proof Group, part of the Fahrenheit consortium that acquired cryptocurrency exchange Celsius, is now a contender to help revive FTX. Also in the hunt, former New York Stock Exchange president Tom Farley's crypto exchange Bullish is among the bidders in the bankruptcy auction, according to a Wall Street Journal report. Cryptocurrency exchange Kraken is hiring, and the position has people talking. The posting for a senior cryptography engineer hints that the company might be developing cryptographic protocols and layer 2 solutions that make it easier to scale applications built on slower blockchains. Though the reports are unconfirmed, such a move would not be unprecedented. Coinbase launched its own Ethereum layer 2 in August. News site CoinDesk cited the proverbial, quote, people familiar with the matter in a report claiming Kraken was in discussions with potential partners, including Polygon, Matter Labs, and the Nil Foundation. Despite the buzz, a Kraken spokesperson maintained a veil of secrecy, telling Telegraph and CoinDesk, quote, we're always looking to identify and solve new industry challenges and opportunities. We don't have anything further at this time. End quote. We've all heard that before. The crypto community has had mixed reactions, with some questioning the need for another Layer 2 network in an already fragmented landscape. The Layer 2 market is currently dominated by optimistic rollups, according to data site L2Beat. But Kraken's foray into the space could signal a shift towards zero-knowledge proof solutions, which offer distinct advantages such as increased privacy and immediate transaction validity. The U.S. Securities and Exchange Commission is pushing for a summary judgment in its case against Terraform Labs and its CEO Do Kwon. In February, the SEC sued the exchange alleging securities law violations. On Friday, that's last Friday, November 3rd, the regulator said there was no need for a full trial, citing, quote, clear, undisputed, and overwhelming, unquote, evidence of fraud and misrepresentation in the marketing of Terra and its tokens. Kwon and his lawyers asked the case be thrown out, saying they didn't violate U.S. securities laws. The SEC contends that Kwon misled investors about the stability and usage of the Terra USD stablecoin, which collapsed in a high-profile event that saw the stablecoin lose its peg to the US dollar, then disintegrate to almost nothing, triggering a broader market downturn. The SEC also challenges the unregistered public sale of Luna and Mir tokens, arguing that they were marketed as investments that would appreciate based on the company's efforts, a criteria in the Howey test for securities law. Also this week, Jump Crypto president Kanav Karia pleaded the fifth when asked about a deal with Do Kwon to help restore the UST stablecoin peg, fueling even more speculation about the case. Decentralized finance protocol Aave temporarily suspended several markets due to a reported issue with a feature across its platform over the weekend. The so-called Aave Guardian, a community-elected body, has paused Aave 2 on Ethereum and frozen specific assets on Aave 3, cross-chain including Avalanche, Polygon, Arbitrum, and Optimism. On social media, Aave's team sought to assure users that, quote, no funds were at risk, end quote, and that a governance proposal to resume normal operations would be forthcoming. The proactive measures allow users to manage and withdraw existing positions, but restrict new deposits and borrowing. Aave's founder, Stady Kulachov, wrote on social media, quote, within hours, measures were taken to mitigate the risk, resolve a patch, and review and deploy the first proposal. Incident management at its best, end quote. Only time will tell of how that works out. At the time of this recording, the details of the vulnerability had not been disclosed, supposedly to prevent potential exploitation, according to the post, especially considering the existence of multiple Aave forks. Each fork marks a potentially separate target using the vulnerability. Despite the operational pause, Aave's native token, Aave, remains stable at the market. A detailed post-mortem is expected once the issue is fully resolved. This week, the cryptocurrency market witnessed a significant surge in the Aave token linked to the Bitcoin Ordinals protocol, with a 77% increase in value following its listing on the Binance exchange on Tuesday. Trading at around $12, Aave's rise underscores the growing interest in tokens that utilize the Bitcoin network beyond its traditional use. The Ordinals protocol, introduced in January, allows for the inscription of data such as text, images, and even audio or video onto Bitcoin's smallest denomination called the Satoshi, effectively bringing NFT-like fungibility to Bitcoin. Binance has categorized Aave under its so-called seed tag, indicating the status as a supposedly innovative but highly risk asset due to its novelty and potential for volatility. Binance's team has cautioned investors about the risks, advising thorough research and risk management for those considering trading the token. In related news, KuCoin and Gate exchanges announced plans to list the meme coin Sats, built using the BRC-20 standard for assets that rely on the Bitcoin blockchain. Moody's Analytics has reported that large-cap stablecoins, each with a market cap of over $10 billion, experienced a whopping 609 depegging events this year. However, that is in fact a slight decrease from 2022's even bigger total of 707. These depegs, defined as a fluctuation of more than 3% against their fiat peg in a single day, highlight the underlying volatility in the sector. Notable incidents include USDC's drop to 88 cents during the Silicon Valley Bank collapse and a 50% plunge of the real USD stablecoin. Moody's new digital asset monitor aims to predict depeg risks, tracking major stablecoins like Tether and USDC. And that's all. Thanks so much for joining us today. With daily podcasts, videos, and written updates, Unchained is your go-to source for all developments that could redefine the crypto landscape. Visit unchainedcrypto.com and never miss an update. Unchained is produced by Laura Shin, with help from Kevin Fuchs, Matt Pilchard, Juan Aronovich, Megan Gavis, Shawshank, and Margaret Curia. This weekly recap was written by Juan Aronovich and edited by myself, Michael Del Castillo. Thanks so much for listening. Looking forward to chatting with you next week.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 7 days a week, with new host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.